Our exports are at an all-time high. We've added about 70 billion to our exports since the referendum. We're at about 30.5% at the present time, up from 28.7% when the department was created. And we're fortunate in that our trade is still growing faster than our GDP. If you look at the UK GDP, our figures have been upgraded again for this year when most of the Eurozone's been downgraded. And our trade has picked up in the first quarter, accelerating from where it was in Q4 of 2018. So our export performance is strong. And we want to continue to build. The reason that we're moving towards a target of 35% and not the high 40s with Germany at 47 at the present time is that the German economy has shown in recent months to be very vulnerable to regional slowdowns, in this case China, and we think 35% is a reasonable balance for an economy like the UK. Well, that's kind of the second question. The first question is, how do we encourage the banks to actually help those businesses? And we're having discussions with the banks on an ongoing basis about how do we make capital available to those SMEs to give them the confidence to be able to dip their toe in the exporting market. But we're also looking at ways at the present time in which we can unlock some of the investment coming into the UK, the record level of investment at the present time, coming from sovereign wealth funds, coming from big institutional investors. How can we help channel that into the SMEs? And then how can we help the SMEs getting into the exporting markets? For example, a lot of SMEs will not know that they can access UK export finance if they're part of an export supply chain without being an exporter themselves. And I hope that we can utilise our relationship with the banks to actually get information to bank customers about some of the services that are available, not necessarily through the banks themselves, but through the government agencies and the exporting opportunities that are out there every day on things like the great.gov.uk website. It's often not that the services are not there, but that the small businesses simply don't have time to look for them, and we've got to try to find shortcuts for that. Well, of course, we said the agreements would be in place when we left the European Union. Of course, we've not left the European Union yet, and there's a natural desire of trading partners to want to know at what point they have to make commitments because of the potential of us leaving without a deal. As when the deadlines get stretched, you get a diminution of interest, and then it will come back as we get closer to the deadline again. But of course, it's not been a wasted opportunity because we've done a huge amount of work. Some of the agreements we've come to, for example, with Switzerland, extend 3 years beyond the period of exit, whether we've got a deal or not. So we'll be signing further agreements in the next few weeks. And it's understandable that countries don't want to invest the resources unless they think there's a genuine risk of us leaving without a deal. For them, that's now receded to October. But we'll keep the work going because it's good preparatory work for what we will need to do in the implementation period when we get there.